Students, we welcome you to our classes conducted by our YouTube channel SL Account School. Today's topic is costing. What is costing? Costing is a technique, a method, or a system and process of ascertaining, calculating, measuring cost of production or cost of services. There are several techniques, but it is not a haphazard way of calculating. It is a systematic process, whatever the technique is deployed. This helps the managers to know the cost of a production or service, not only the total cost of production, also to know what it constitutes. For an example, how much is the cost of raw material, how much is the cost of labor, how much is the cost of overheads, etc. Then they will know where adjustment can be done in order to improve the production cost and thereby maximizing the profits. This is out and out a management tool. As you all would have already concluded, this is for production or manufacturing concern and service providers, not for normal buy and sell trading. The primary users of costing are the managers. There are several objectives and purpose in preparing the costing, but the primary ones are: one, ascertainment of cost. This is the most important one. The purpose of doing all this exercise is to know how much is the production cost, at what production level that you can make profit, etc. For an example, the production at certain level might prove to be unprofitable. At another level of production, it can be profitable. Another objective is to control or manage the cost of production. How is this done? You prepare budgets and standards for various factors of production, components of production, and subsequently compare them with the actual performance. Then you will come to know where to control your expenditure, where you have done more efficiently or otherwise. This is also a guideline for management. They can compare their businesses with the business norm, and they can go into each and every department or even each and every constituent of the cost, and thereby making necessary changes, improvements, etc. We have included a chart analyzing the cost. The primary components of costs are direct material, direct labor, direct expenses. Whatever costing methods you adopt, this will be a basic foundation. At this stage, it is known as prime cost or direct cost of production. As a next step, by adding the production overheads, it can be calculated as cost of production. Production overheads can be variable or fixed. When you say variable, as the level of production increases, that expenditure will increase. Fixed production overhead is whatever level that you produce, that amount will remain as it is. To arrive at total cost, you further add not only the production overheads, also non-production overheads, which will have no direct relevance to the production. There are several techniques of costing. The choice is by the management. Whatever suits them best for their production line, they will choose them. We shall learn some of them. First, standard costing. As the name denotes, standards are made for each component of the production. For an example, raw material, at what price to buy, how much to be used producing a unit is predetermined or fixed as standards, and subsequently whatever really has happened, the actuals, will be compared with them, and we will know at which level we have gone wrong. Sometimes we would have used the material efficiently, but the rate we have purchased are incorrect or it is overpriced. In that case, still your cost will go high, but you know where you have gone wrong. The difference between your actuals and the predetermined standards are known as variance. The most commonest variances are price variance or usage variance. In other words, rate variance, efficiency variance. Another method of costing is absorption costing. This is also known as full costing, as it takes all the factors of production, total cost of production, into the calculation. This method, after capturing all costs associated with the manufacturing of goods, these are absorbed into a predetermined rates which are scientifically fixed. Sometimes it can be units, it can be man hour, etc., or machine hours, etc. It should be clear in the minds of the students, this is not apportionment, it is not a distribution, this is an absorption of a cost already incurred. For an example, take a bowl of water and a sponge. Every time the sponge is immersed into the water and the water is taken out, say it's an absorption. If the predetermined level of absorption is say 25 times, after 23rd time, if the water finishes, it means it's a overabsorption. After using the 25 times, let's say 27 times, still the water has just finished, then it means underabsorption. Hope the students are clear about it. Okay. Another method of costing is job costing. Each job, varying sizes, will be considered as a unit. For an example, a printing order, costs relevant to each of those jobs are determined and assigned to those particular jobs separately. Another method is activity-based costing, where the overheads and indirect costs, such as salaries, utilities, etc., will go into various process or department. For an example, machine department, assembly, finishing, etc. Another important costing method is marginal cost, where every additional unit of production will have effect of change in the total production cost by the variable cost. In this method, a clear distinctive difference between the fixed cost and the variable cost are important. Fixed cost, for an example, you take a factory premises, say at the rate of 20,000 a month, and planning to produce 5,000 units of a certain product. But if you happen to produce something less or something more, will the rent vary? No, it won't vary. For an example, if you produce 5,000 units, per unit, the cost of factory rent could be 4. But if you are producing 10,000 units for a month, then it will become 2. Whatever level of production, the fixed cost will remain up to a certain point. However, if you have the optimum usage of the premises and if you can't expand anymore, then you may have to go for a new premises. That is a new fixed cost. Variable cost is cost totally or directly in relation to the level of production. For an example, if you produce 10 units, if the variable cost is 20, if you produce 100 units, it will be 200. If you produce 1000 units, it will be 2000. In the marginal costing, you will often hear about a terminology called contribution, which is the sales minus variable cost. More you produce, higher the contribution will be, and higher the contribution, it will get higher allocation of fixed cost. The next thing to know is break-even point. Break-even point means there is no profit, no loss at that level of production. In other words, the total contribution is equivalent to total fixed cost. Beyond this point, any contribution will become a profit. Another terminology to know is margin of safety. Margin of safety means the difference between actual sales and sales at break-even point. The comparison between absorption cost and marginal cost is made here. In absorption cost, both fixed and variable production costs are taken. In marginal cost, only variable costs are taken. All the fixed costs are sunk cost or taken into that period of production. Next, in absorption costing, the inventories are valued at full production cost, whereas in the marginal costing only at variable cost. If the inventory level is increased, absorption cost gives the higher profit, whereas if the inventory levels decreases, marginal cost gives the higher profit. Absorption costing, as we have said earlier, reflects the full cost and which is recognized by all accounting standards. Marginal cost is only an internal arrangement for management's decision making. Hope the students have understood whatever we learned up to now, and we will move on to few illustrations and questions. Use the following information to calculate direct material quantity variance. Also describe whether the variance is favorable or unfavorable. Standard price of direct material is $4. Standard quantity of direct material per unit is 2. Actual unit produced during the period is 620. Actual quantity used during the period is 1200. Answer: actually, they have made 620 by the standard of 2 per unit. It should have been 1240, but actually quantity used was 1200, so there had been an improvement of 40 units. Standard price per unit is 4, therefore the direct material quantity variance is 160. Since the production have been more efficient, this is a favorable variance. The next illustration, a product T is produced by mixing 3 materials, P, Q and R, in a standard mix ratio of 1:2:2. Actual material consumed during the month ended May 31st, 4,670, 8,450, 8,390 respectively. Standard prices are 4, 3 and 2 respectively. We are expected to calculate the direct material mix variance. Since there are 3 materials in which how much variance has taken place, in which you have taken favorable variance, in which you have got unfavorable variance. Actual quantity is 21,510. That is the sum total of 4,670 plus 8,450 plus 8,390. As per the standard mix ratio, to achieve this level of production, it has to be 4,302, 8,604 and 8,604 respectively. If you compare them with the actual quantity which is given in the question, you will see P unfavorable usage of 368, Q favorable 154, R favorable 240. If you multiply them by the standard cost, figures are shown here. The ultimate answer is direct material mix variance unfavorable 5.82. Let's move on to the next MCQ. A company is reviewing its cost. It discovers the following in respect of its factory supervision expenses. Output in units 8,000, cost per unit is 8. Output in units 10,000, cost per unit is 6.4. Which type of cost is this an example of? 4 options are given. If you look at the working, the first one, 8,000 into 8, 64,000, 10,000 into 6.4, 64,000. It means that cost has not varied. Therefore, this is referring to fixed cost. Answer is A. The next MCQ is, which statements about absorption costings are correct? 1. It apportions overhead between production and service department. Correct. It enables a company to know its break-even level of production, that is marginal costing. Wrong. 3. It leads to a higher inventory valuation than marginal costing. Correct. It used by management for make or buy decision. No. Therefore, the answer is B. 1 and 3 are the correct answers. Now the next MCQ. The following data applies to business. Budgeted labor hours 10,000. Actual labor hours 9,500. Budgeted overheads 150,000. Actual overheads 160,000. What is the amount of overhead absorbed? Over or under? Look at the workings. Budgeted overhead divided by budgeted labor hour gives you the absorption rate for each labor hour, which is 15. Actual labor hour used is 9,500. Therefore, the amount absorbed was 9,500 into 15, 142,500. But actual overhead is 160,000. Therefore, 17,500 was under absorbed. The answer is D. The next MCQ, which statement best describes a job costing? A costing method that calculates the cost of meeting a specific customer order. B. A costing method that calculates the cost of producing a number of identical units for a customer. C. A costing method that enables overheads to be absorbed into the cost of product. It's about absorption costing. D. A costing method that separates fixed costs from variables. This refers to marginal costing. So you will have to choose between A and B. A is more appropriate than B. Therefore, the answer is A. The next MCQ, which objectives are achieved by the introduction of a budgetary control system? 1. Coordinating of the business activities. Correct. Encouraging communication between departments. Correct. Ensuring wage rises do not occur. Wrong. Therefore, the answer is 1 and 2 only. A. Another MCQ. A company wants to sell 50,000 units and to achieve a profit of 600,000. It has a variable cost of 60 per unit and a total fixed overhead of 400,000. Which selling price per unit does the company need to charge? So, if the company wants to achieve a profit of 600,000 by selling 50,000 units, it should be, if 600 divided by 50, it is 12 per unit. Similarly, fixed overheads of 400,000 divided by 50,000 unit is 8 per unit. The variable cost per unit is 60,000 as given in the question. Therefore, the selling price should be 80. Answer is D. Now, the next MCQ. A business manufactures and sells a single product. The following information is available. They have given this year's cost and the estimated next year cost. Selling price per unit is 25, have remained the same. Variable cost per unit, now it is 15, but in the future it's going to be 17. The total fixed cost now is 80,000. Next year it is going to be 84. The profit for this year is 20. How many units must be sold to achieve the same profit for next year? This is a question on marginal costing. In order to resolve this, we will have to first calculate the contribution, which is fixed cost plus estimated profit, that is 84,000 plus 20,000, 104,000. The variable cost is 8, 25 minus 17, which is given in the question. If we are to achieve the contribution of 104,000, if it is divided by 8, you will have to sell 13,000. Answer is D. The next MCQ is, how is margin of safety calculated? A. Actual sales minus break-even sales. This is the correct definition. Therefore, the answer is A. Next MCQ. Why might a business use marginal cost? To calculate break-even units, correct. To decide on the most profitable use of limited resources, correct. To decide whether to make a product or buy it, correct. Therefore, the answer is A. It gives 1, 2, and 3. Okay. The next MCQ. Budgeted overhead expenditure was 180,000 and budgeted labor hour were 12,000. Actual overheads amounted to 196,000. Actual labor hours were 12,200. What was the under-absorption or over-absorption of overhead? In order to answer the question, first you will have to find out what is the budgeted absorption rate per labor hour, which is divide 180,000 by 12 and get an answer of 15. Actual labor hour used was 12,200. Therefore, at the rate of 15, it should have been 183,000, but it is 196,000. Therefore, there is an under-absorption of 13,000. Answer is D. Next MCQ. What is the reason for calculating an overhead absorption rate in a manufacturing business? A. To control overhead expenditure. It is not the objective to calculate absorption rate. Therefore, it is wrong. B. To determine whether or not a supply is overcharging. That cannot be found by absorption rate. This is wrong too. To enable overheads to be apportioned to cost centers, this could be activity-based costing. So this is not the answer. D is the answer, which says to establish cost per unit of product. Next question. A business provided the following information. Month February, number of labor hours 64,000, total overheads 918,000, which has both variable and fixed cost. March 76,000, the total overhead is 1,062, comprising of variable and fixed overheads. The question, what was the monthly fixed overhead cost? In order to answer, we will have to find out variable cost. Variable cost is the one which will vary from the level of production. Variation on the labor hour between February and March 76,000 minus 64,000, 12,000. On the same basis, the amount varied is 144,000 as given in the working. Therefore, variable labor per hour is 144,000 divided by 12,000, answer is 12. If you remove them from the fixed overhead in February 980, you get an answer of 150,000. As a further proof, if you do the same thing with March 1,062,000, again the fixed overhead is 150. Therefore, the answer is B. Okay, the next MCQ. A manufacturing business has three production departments: machining, assembly, and finishing. The following are the expected expenses for the forthcoming year. Rent and rates 13,200, depreciation 60,000, supervisor's salary 30,000, machinery insurance 15,000. The following departmental information is available: floor area used by each of these activity, value of machinery used by each of these activity, number of employees used by each of these activity. All employees work a 40-hour week for 45 weeks per year. You are required 1. Apportion the overheads to the department using the most appropriate basis. Here what you are asked is apportionment, allocation of various expenditure on an appropriate basis. Rent and rates, the best allocation basis is floor area. Depreciation, the machine value. Supervisor's salary, number of employees. Insurance, machine value. This gives the answer of machining department 55,000, assembly 30,300, finishing 32,900. The second question says to absorb these expenditure by direct labor hour. On this basis, direct labor for machining is 10,800, assembly is 10,800, finishing 5,400. If you calculate, you have an absorption rate of 5.09, 2.81, 6.09 respectively. Next illustration. C Limited produces a single product. The details are as follows. Direct material per unit is given. Direct labor per unit is given. Sales commission per unit sold is given. Selling price per unit is given. Fixed cost is given. Question 1. Calculate contributions per unit. The answer: selling price less commission per unit is 51.95. Variable cost is 21.25. Labor 20.7, giving a total of 41.95. That gives you a contribution of 10. Question number 2 is, if 72,000 units are produced and sold, is it profit or loss? In answering the question, net sales 72,000 into net sales value, variable expenditure into 72,000 gives you a contribution of 720,000 as against a fixed cost of 410,500. Therefore, there is a profit of 309,500. Question 3. Break-even points in units. Fixed cost is 410,500. Contribution per unit is 10. Therefore, the total units to be produced and sold is 41,050 to have break-even. Question 4. Contribution to sales ratio corrected to 1 decimal place. Sales value is 5210. Contribution is 10. So the ratio of that is 19.2. Question 5. Calculate the break-even points in sales value if fixed costs are increased by 21,500. If we increase the fixed cost by 21,500, it will be 432,000. To divide that by contribution 10 per unit and multiply by 5210, the selling price, it will give you the new sales value. Question 6. Explain the term margin of safety. The answer, the excess by which actual sales exceeds break-even sales. Question 7. Calculate the margin of safety if 72,000 units are produced and sold. The answer, sales 72,000, break-even sales 410,050. Therefore, margin of safety is 30,950 units multiplied by the sales value of 5210 will give the margin of safety amount 1,612,495. The final question is, according to International Accounting Standard 2, inventories which two of the following costs should be included in valuing the inventories of manufacturing company: carriage inward, carriage outward, depreciation of the factory plant, general administrative overheads. The answer is 1 and 3 because the other two does not refer to manufacturing. This question is introduced here in order to emphasize these are the real accounts. Costing is a technique, a tool to help the management. Hope the students have understood. As you all know, these classes are provided to you by our YouTube channel, SL Account School. We kindly request you to share, like, and promote it among the people who are interested. Thank you very much.